How do I survive in an economic recession even when everything is not going to plan? Welcome to Streams. On this edition of Streams, I'll be sharing with you 4 fundamental strategies that you need to master in an economic recession or pressure like this, because there's cost of living, there's high inflation, and there's high currency devaluation that is practically taking away people's life savings and investment in parts of the world. And you need to understand these strategies, because at the same time that we're going through this difficult economic climate, this is the greatest time that wealth is moved and the rich makes more money because they buy things on the cheap. And if you look at these 4 strategies, you can also position yourself so that you can take advantage even in a very bad time. Number 1, things will take a little longer to get to the yield curve than you thought. You see, a yield curve is when you invest and then the time you expect the economy to turn around or that investment to turn around to make profit, which you can reinvest or begin to take some profit out of it. You see, it all comes down to expectation. If my yield curve expectation is 24 months, if it happens in 6 months, 12 months, or 18 months, it won't bother me because it's a question of expectation. But if you have a very ambitious expectation that your investment should yield benefit in 12 months and it doesn't go to plan, you'll be disappointed, you could be devastated, and it will affect your cash flow or your liquidity. But if you are planned to have a longer time frame in terms of understanding that your yield curve will take a little longer than it used to. Say, for example, what you think should be 24 months, plan for 36 months. What should be 36 months, plan for 48 months. So in that way, you prepare for the unforeseen dimensions of the economy that may want to cut you off guard. So you're eating your yield curve will take a little longer than you are taught. Number 2, whatever the talking heads are saying, the economic recession might be worse than you thought. You see, in some parts of the world, you had about a high single-digit even interest rate. In UK, it's about 8.6%. About 3 or 4 years ago, if you talk about 3%, they think, why will you take that kind of a deal when people were getting 0.9 or 1.6%? But today it's 8.6 or 7, not or 7%. In Turkey, interest rate is about 18.75%. And some parts of global south is 22, 25, or 30%. So there is intense pressure. Coupled with that, a lot of currencies are practically losing their values against the dollar or against the real estate, depending on what you are using to measure it. So you must understand these dynamics, and things will be a little worse than you are taught, because we have this tendency of making things look rosier, better than it actually is. It's part of the way our mind tries to, make us not to be depressed or to keep us safe. But you need to prepare yourself so that you can create a better runway for yourself, that things might get a little worse than you had expected, because they say some countries have dodged the recession bullet, but so many other countries are still in trouble. And if the inflation is not coming down quickly enough, some other countries might too go into recession. So things might get a little worse than you expected, so prepare a better runway for yourself. Number 3, deepen your understanding of money management method or financial management in a way you understand what are your liabilities and what are your assets, and how are you apportioning your resource. Are you allocating more resource to assets rather than liabilities? Look at the things that you don't need, that you can get rid of. Look at things that you can liquidate, that you can turn to cash to reinvest and take advantage of this market, so that you can add to your runway. Your runway is how long you can run even when no fresh money are coming into your investment, or you can keep yourself, afloat till the economic turns around in your favor. Number 4, finally, buy cheap, good companies or investment that are undervalued. During a bull market, everything is overvalued. Everything is overvalued because you are buying at the top end of the market. But in a recession or a depression or whatever you want to call it now, things are also highly undervalued. So you could see things that are companies that are down 90%, 80%, and if you do your own research, due diligence, you will know the ones that are good investment, that have good cash flow, that have good runway in terms of their own asset or cash in the bank. So identify these things and take the full advantage of one, preparing yourself, two, doing the necessary due diligence to identify where to allocate, your limited resources in order to take advantage of the market when it turns around, because it will not continue like this forever. It will turn around. That's what people like Warren Buffett knows. They know when to save up, buy things on the cheap, and get a good discount on their investment. You might need a guide in this phase because some of you have not been here before. In fact, some people have been like, what hit them? So if you need a guide, look at some of the links beneath this video and subscribe, and then be in touch so that you can be guided how to navigate this economic recession. I hope this is useful for you. I'll be looking forward to sharing with you again next week, but subscribe to this channel. There are more materials with which you can skill yourself up. And if you sure need a guide, be in touch and sign up. Thank you very much, and I look forward to seeing you next week. Bye.